This TFMR podcast is brought to you by your friends at JM Bullion. Visit jmbullion.com for all your gold and silver bullion needs. Welcome back to your TF Metals Report weekly podcast highlights for the week of May 10th, 2021. It's a very busy week in the precious metals with all sorts of inflation data and signs of a very slow economy. Oh, it picks up pretty well if everybody's getting a government stimmy check, but as soon as they don't, it slows down. We're on the verge of stagflation and yield curve control from the Fed. But as we began the week back on Monday the 10th, we knew it was going to be busy, so we thought we should start off by checking the daily chart of COMEX Gold. Gold on the daily chart, this is pretty handy though, wouldn't you say? Let's start with that RSI because I've mentioned it a couple times now. Look at that in the lower left-hand corner, 68.69. That is the highest RSI since that rally we had the first couple trading days of the year. Okay, so we're good. I mean, the trend is good. The trend is positive, right? Look at that 50-day. The green line is starting to move up, right? Pretty soon. Yeah, not too long. What's 50 days? Going back to that first low back in early March? See how the 50 day is going to start moving up pretty sharply over the next 2 or 3 weeks, and all of a sudden it's going to be up there near the blue line. So we're going to get a bullish cross, or at least we should, by the end of this month or so, of the 50 day up through the 100 day, and the 100 day will start turning up too. So we're not quite, in some crazy bullish configuration yet, like we're going to be in silver. I'll show you that chart in just a second. But note my blue lines on here. There is clearly a double bottom at 1680. I mean, you can see that, no problem. But look at how perfect this up channel is off of that. Those lines perfectly parallel. I drew, if you're wondering, the lower one first. That's where I always start. Connecting that low with those other two tails hanging down in late April and last week. But then I thought, those tops look like they're pretty even too. So I drew a parallel blue arrow and moved it up. Look at that. 5 of them, including today. So I think we're on to something here. If you're aggressively trading, I would suggest you draw this yourself and you keep a real close eye on it. One of the things we looked at on Tuesday, May the 11th, was a chart of the GDX. That's that ETF made up of major gold miners. It's been breaking out and looking higher, but one of the things we're going to have to keep an eye on is the fact that it can still make a series of lower highs. So that'll be something we'll be watching closely in the days and weeks ahead. Check this GDX chart. I wanted to show you the significance of where we are and what happens next, okay? First, look at the green candle today, right? Opened way down there like at 36.70 and closed a point higher. Massive green candle, all right? If you look across, like I said, that's the highest daily close in the GDX since January the 7th. Dipped below the 200-day moving average at the open today, and rather than engender selling, we got dip buying and now closed back below it. That looks like a very successful test of the 200-day and implies higher highs, higher moves from here. But to where and what's the most important level? What I'm trying to show you here, see the little humps? Those are all lower highs, indicative of a downtrend. If we do not get above the last lower high, which is right there on the first trading day of the year at 39, then we're still just making another lower. I mean, if we roll over from here, we go, look, that's just another lower high. Now we go down, maybe make another lower low down near 29. No, that's not going to happen. But you get my point. So what I try to show you here is a string of lower highs that even though we've rallied for the last 2 months from 31 to 37, that's 20 some odd %. And then we're back above the 200-day. What we really need to do to get people excited is to make a higher high. A close up above 39. We're getting there. Today's action, a positive test of the 200-day. Very, very good development. Wednesday, May the 12th, was all about the consumer price index with a huge jump, some of the biggest numbers we've seen in decades. That got the bond market to sell off and the dollar to rally, and obviously that had a negative impact on the precious metals, but it also was impacting the stock market. We don't just talk about the precious metals at TF Metals Report. We checked just about everything. And on Wednesday, May the 12th, we looked at the chart of the S&P 500, noticed that on multiple occasions in the past year, it had pulled back to its 50-day moving average and bounced. That's where it was on Wednesday, May the 12th, so we figured it would probably bounce the last 2 days of the week. And by the time we got to Friday, that turned out to be true. First, we'll start with the S&P. We don't do this very often. Begin to look at this last Friday, closing up there at whatever that was, 42.30. And now here we are, 180 points lower. What, 4% in 3 days. Now, this isn't the first time this has happened. You can find runs like this almost every month or every other month, going back over the last 12 months, which is what this chart shows. This chart also shows, though, the 50-day moving average. Notice in September, we came down, broke below the 50, stayed below for a week, and then went right back up. Fine, trend continued. Late October, broke down, stayed below for about a week, got back up, trend continued, then we stayed above it all the way into the end of January. Then came down, fiddled around for 2 days, holding it as support, moved higher. Came down into February, held it as support, moved kind of sideways, and then dropped below for a day or two, and then got up again, tested again as support in late March, and now here we are again. Could we roll over? Sure. What would make me think, okay, wow, that trend's over with? Well, you'd have to come all the way down and get somewhere down near 3,700. Well, shoot, that's like 10% more from here. I mean, everybody'd be like, oh, freaking out by then, and then it really would be over. So anyway, I just think that, I mean, you look at this chart, you think the stock market's going to probably turn around and rally beginning in a day or two. And why would it rally? Because the bond market be rallying back and or the dollar be going down. And if that's the case, then the metals are going to rally back and finish the week nearly unchanged. On Thursday, May the 13th, we noted that the bond market looked like it had stopped selling off. Yields has gone up and tapped 1.7% on the 10-year note twice that day. Looked like a little double top. We started to think, well, what if we continue to rally in the bond market on Friday? What if the retail sales number came in a little lighter than expected? Would that give us a shot at a high close, a big rally into the end of the week, maybe turn that weekly candle green? Sure as heck it would, and sure as heck it did. Here's that 10-year note chart. Told you this morning. We're going to watch those lows as it came back down. Under 168, 167. Got through there, tried to get back above, couldn't, and we're actually going out lows at yields of the day. And again, this chart shows you where we were in the hours leading up to the CPI yesterday. I remind you, where was gold in the hours leading up to the CPI yesterday? 1845, 1843. We get the nominal yield on the 10-year back to 162, but know what we know about inflation and what the CPI is printing now. Why wouldn't gold be even higher than 1845? Yeah, that's definitely a possibility. Could get if I'm right about the bond market rallying tomorrow, we could get a really stout rally to end the week in the metals. And on Friday, we finished the week very near the highs of the week in COMEX gold and almost all the way back to unchanged in COMEX silver. It was a very positive day. Dollar fell sharply. Interest rates fell as well. We got some very, very interesting news out of the Fed. And so the gold chart, especially the weekly chart, has begun to look very bullish. And that was something that we were very excited about to wrap the week on Friday, May the 14th. All right, check this out. There's two main things you got to see because we check this. I guess there's three. We check this every Friday. First, the bull flag line, no doubt, broke out last week and now moved back above the most important thing, number two, which is the 50-week moving average. We've been talking about this now for over a month, how we came down and tapped the 50-week in March of last year, came down and tapped it in October and November last year, rode it for almost the entire month of February before collapsing below. Now, broken out through the flag line, and look at this. The 50-week moving average, 1837.60. I've got a last of 1842. A second close next week above this level, and it is on. One last thing that is very important. We don't talk about this very often because these changes don't happen very often. But look at these little squiggly lines at the bottom. That is your MACD convergence. Okay? The red line crosses the blue line. That's usually the start of an uptrend. See that in like beginning of February 2017? See that at the beginning of October 2018? See that at the beginning of maybe February last year? And see that now. Last time this happened, beginning of February last year, we're at 1550. We went to 2050. Back it up. October of 2018. Before we crossed back down again, we went from 1,200 to 1,550. Whoa, I mean, we're going what, 25% from here? Yeah, that sounds about right. 25% rally from here would put you where, let's call it 30 just to round up. That's $500. That would take us up to 2,300. Who is it that said 2,300 this year was their target? We hope you enjoy these podcast highlights from TF Metals Report. Again, we record a podcast every single afternoon for all of our subscribers. That's along with a posted update every morning. In between, you get to interact with the best precious metals community on the internet. All of it for just $15 a month. Come to TF Metals Report and check it out. Very easy to subscribe, and it might be the best financial decision you could make in 2021. Hope to see you there, and hope you tune back next week for another one of these podcast highlight shows.